Hello and welcome back to another episode of Chat with Brandy, where we talk business and personal finance, taxes, and how to make money doing what you love. I am your host, tax preparer and bookkeeper, Brandy Miron, and this is episode number 23. Today we are diving in to this is a question that I get from a lot of people and a concern for a lot of people, which is when you owe Canada Revenue Agency money. So first of all, if you're watching this, great. I'm so glad that you're here to get information. I want you to know that this is something that a lot of people face at some point in their lives, whether they're business or they're personal. And there's a variety of reasons. Some are not your fault. Sometimes there's things that just get forgotten, things like that. Either way, you're not alone. And honestly, Chat with Brandy is a totally judgment-free zone. My office in general is a judgment-free zone. So I hope that for this episode, you can just kind of put that shame away and take the information on. So let's just dive right into it. So first things first, I want to talk about the types of debt that you might owe Canada Revenue Agency. So the most common ones on the personal side would be, of course, your individual income tax, including if you have a sole proprietorship and you owe tax on that. Benefit overpayment. So for example, if you accidentally got overpaid, and again, for whatever reason, child tax benefit, GST or HST credit, there's also all the provincial benefits. So Alberta carbon levy, Alberta family amount, those kinds of things. Then on the business side, there's the corporate income tax, payroll source deductions, GST, and then customs excise and other levies if you're dealing with exports. So also, if you owe money to another government department that isn't Canada Revenue Agency and you have a tax refund owing to you, Canada Revenue Agency still acts as a collector for those debts. So in other words, they can use your refund against certain government debts. So for example, defaulted Canada student loans, EI overpayments and penalties, training allowances payment overpayments, CPP overpayments, grants and contributions, operations and maintenance receivables, and I've personally seen overdue tax, traffic fines get collected by Canada Revenue Agency. So obviously, you know, this is going to seem super obvious, but the best way clearly to not be in debt with CRA is to pay it off in full. All of the payment instructions and that kind of stuff, all the different methods of payment will be in the show notes linked. But obviously, if you're watching this video, the chances are that the option to pay in full is not possible. So my best advice to you and every client that I deal with who owes Canada Revenue Agency money that I know isn't going to be able to pay in full is to contact them before they contact you. So they're going to be much more willing to do a payment arrangement with you if you can show that you're willing to pay and that you're not just ignoring the debt. So with payment arrangements, they will still charge interest, okay? But it's typically a much lower rate than, say, a credit card. So if you're planning on putting the entire balance on a credit card and then paying off your credit card installments, interest-wise, it just doesn't make as much sense because first of all, the interest that CRA charges, or Canada Revenue Agency charges, changes every quarter. But for example, this quarter it's 6%, which is much lower than most credit cards, which are usually around 18 to 20%, okay? So back to what I was saying, if you make a payment arrangement with Canada Revenue Agency, they will continue to charge you interest, but they will stop collection activity, which we'll get to in a little bit here later. And also it's acceptable for them. So that means that they won't continue to charge you penalties, they won't continue to call you and that kind of thing. So sometimes when you're making arrangements, you may have to provide proof of your income and expenses, your assets and your liabilities, okay? There is a worksheet online and a payment arrangements calculator online that CRA provides in order to kind of calculate what you think that would be a reasonable payment arrangement. I will link that for you in the notes, okay? Now, there are also circumstances where your penalties or interest may be waived if you're in a financial hardship situation. So let's say for whatever reason, you end up getting a 5% penalty for filing late, or sometimes they'll penalize you for missing a tax slip or something like that, okay? So if you can prove that either A, it wasn't your fault, and a lot of times you can't just use ignorance as an example or as an excuse, should I say. But if you can prove like, you know what, I did send the check in, you guys lost it, that kind of thing. Or on the flip side, if you can prove that these penalties and interest are going to cause you financial hardship, they may waive those penalties and interest. And I've certainly seen it where they do. However, I will say that their definition of financial hardship is literally you're unable to pay for your shelter and your food and that kind of thing. And for on the business side of things, it has to be like the operations of this business will cease if I have to pay these penalties and interest. So it is pretty stringent what they consider to be financial hardship, but just so you know, that option is there, okay? Also, if you're in a situation where you haven't filed yet or like you have filed, but you know that it wasn't filed correctly, and you know that once you do file it correctly or you do file it at all, you are going to owe a substantial debt, or you know that you're going to be penalized for filing late, that kind of thing, you can go through a program called the Voluntary Disclosures Program, which it doesn't relieve you from the actual tax that you owe or the interest in most cases, but they may exclude you from the penalties if they determine that your case makes sense for that, okay? So that is an option as well. Okay, now, I want to kind of talk about the different collection activities that Canada Revenue Agency is legally allowed to take. This is a little bit scary, but you know what? We're almost at Halloween, so it just like kind of makes sense. But this is why when I work with clients that have a high debt load, and Canada Revenue Agency is one of them, we almost always concentrate on that debt first, because CRA has teeth and they will use them when they feel that you're not cooperating. So that is why I say call them first, advise them that you are aware of the debt, advise them that you want to cooperate and make arrangements to pay. That is going to slow down that process quite a bit, okay? Unfortunately, once some of these proceedings that I'm going to talk about have begun, they're not usually withdrawn until your debt is paid in full, or you can show that, again, that financial hardship, okay? So the very first one, which I've already kind of touched on, is interest does accrue daily on your debts. This is base level for all debts with CRA. So no matter what, you know that you're going to deal with that. Okay, the next one is the refund offset program. So this is like, again, no matter how much you owe, if you owe CRA any tax debts or the other government programs that we talked about earlier, and you are due a refund or a GST credit or something like that, they will just take that refund or that GST credit and apply it towards your debt. Same like I say, if you have a traffic fine that's outstanding, they will take the refund and put it towards that. Child tax benefit will not be used against the debt unless the actual debt is with Child Tax Benefit Department itself. So the reason that they do that is because the child tax benefit is there meant to help your children, and it's not typically your children's fault that there's a debt with CRA. So that part is nice, but like I say, if the debt is with child tax benefit, then they will take that to offset. The next one, and again, I don't really think this is a hard and fast rule, but this is basically what I've seen in my experience, is that the next couple collection activities that I'm going to list would typically be on debts that are higher than $3,000. So that is kind of the baseline that I've seen, but I don't necessarily know if that's a hard and fast rule. I'm sure if there's other circumstances where the person is like, absolutely not, I will not pay that. It could be under $3,000. They would still take these collection activities, but anywho, so the next one is garnishment. So the CRA can issue a garnishment to your employer or any third party that owes you money. So if you're a contractor or a corporation, for example, they can look at your accounts receivable, go and contact the people that owe you money. And what they do is they send them a requirement to pay notice, which basically says, don't pay that person, you're paying us instead. So obviously that you can see why that would be detrimental to household or business finances, right? So that's definitely something we want to avoid, because this can also include freezing your bank account and just taking funds directly out of it. Okay. CRA can also legally register your debt with the Federal Court of Canada, which is essentially a judgment against you. This means that they can get a writ or seize, like ultimately sell your assets. So they can go after your personal property, they can go after your car, your boat, any kind of asset that they can sell, they can seize it, okay? In the cases of a corporation, certain corporate debts, so I feel like there's this big myth with Canadians that they're like, okay, if my corporation has debt, that has nothing to do with me, I can just walk away from it. On the corporate tax side of it, that's mostly true, but definitely with some caveats. But what people don't understand is that GST and payroll source deductions are considered trust funds. So that means that CRA says that was never your income to begin with. So in that case, they can actually make the directors of the corporation responsible for it. So if your corporation that you are a director of owes GST or payroll source deductions and CRA feels that the corporation is not cooperating to pay those debts, they can go after you personally for those debts, okay? So that's something that's really important for corporation directors to know and understand when they're signing on to be a director of a corporation. If payment arrangements are not enough or not possible for whatever reason, this type of collection activity or this type of collection activity has already started for you, my next recommendation would be to look into insolvency. So either for yourself or for your business, I would look into a consumer proposal, or I would look into a bankruptcy. So I do have a couple of trustees that I would recommend based on whether you're an individual or corporation. So if that's your situation, please feel free to reach out to me. Again, absolutely no judgment. Trust me, it's something I've seen 100 times before. There's just no shame here, and I want to work with you to get your life back on track. So so if that's the situation for you, please let me know. Okay. Obviously, avoiding the debt in the first place is the best case scenario. And, you know, when I work with clients one-on-one, especially when it comes to business, because, you know, if you're an employee, it's pretty easy to not owe tax because your employer should be remitting your source deductions for you. But when you are a business owner, it's more tough because you have to consciously save that tax money for tax time, and that doesn't always happen. So when I'm working with people, I like to work with them to say, okay, this is exactly how much I want you putting away from each invoice. We kind of go through a program where you open up a new bank account and you just have it sitting in that account, and that works very well for a lot of people, especially if you didn't get yourself into that debt in the first place, okay? But again, you're not alone in this. You're not the first person to make this mistake. You definitely won't be the last. And we can, like, even if you're in debt and your intention is to pay it off and you don't want to go the insolvency route, we can work on a budget together to maximize the amount of profit that you would keep in your pocket and making sure that you're saving, again, an appropriate amount for tax time. Later in this season, I will have the honor of bringing on one of the smartest ladies I know when it comes to debt and finance. She's one of the trustees that I recommend all of the time, and she's going to be here to answer more questions about debt load and the consumer proposal / bankruptcy route, which way to go, and we'll be sure to put an emphasis on Canada Revenue Agency debt. Okay, so I know that this was a little bit of a dark topic, but information is power, and I hope that I encourage you to stop ignoring the debt and maybe start taking the steps to working toward paying it off or dealing with it in some way, because I know that that's going to lead to the best possible outcome for you. And because I hate leaving you on a low note, I have an exciting announcement to make. Next week, I will have my first guest of this season, my business coach and mentor, Dawn Taylor of The Taylor Way. Is going to be a really exciting episode. She's amazing, and she has helped me so much with time management and stress management, and she's going to be here giving her best tips on that. So I strongly encourage you to tune in for that, because it's basically free training and it's going to help you. I know it will. So that's it for this episode. Thanks so much for tuning in, and we will see you next week.